Good morning, fellow option traders. This is Jeff, and welcome to the Daily Scan for Tuesday, March 5th, 2013. Well, let's first dive in immediately and take a look at the market, the way that it's looking for today. Yesterday, we'll take a look at the E-mini here. Yesterday started out not good, and as the day moved on, it got much better. And it recovered a bit, I guess you might say. So here we have the open, and then it moved down quite a bit midday, and then it got very strong as the day finished. And the word out on the street is that there's some confidence out there that the market is just, or that the government's just going to keep pumping money into the market, so that should help stocks quite a bit. But we'll take a little peek at where we think things might be going when we look at the Russell 2000. Alright, back to, let's take a look at the VIX, and I wanted to just point something out about the VIX. If we look at this chart, this is a 5-year weekly chart, as it says up here on the VIX. First, we'll look back into 2008, and that was the financial crisis. You can see that volatility was pretty high even during, for most of the year. Right now we're at 14, which is this red price bubble here. Pretty much as a rule, we were around 20 for most of the year, and then it shot way up, and then it took it quite a while, most of 2009, to settle. So if you have the Trading Pro system, the videos that David made at that time were in this period here of high volatility. So he was making lots of money off of his iron condors, which he had also pretty much directionalized a bit, and he timed them a bit too. So that's the reason why those were making so much money back in this time period when volatility was so high. I believe they were almost all made in 2008, and there might be some subsequent videos that he put out that were made during the first part of 2009. So that's the reason for that. Another thing is, if you look over here, this low bubble is the low for the chart that's being displayed right now, which is 5 years. So we just recently had a 5-year low in the VIX, which is not good for people that are selling premium like we are with our spreads and iron condors and such. And it's also not good for calendars, but it's good for calendars to buy at low volatility and close them out at high volatility. And we've learned that over the last couple of months as we take a look at various calendars and how they work. We're going to look at another one today. Alright, I'm going to stretch this out and zoom in a little bit more here. Okay, now you can see the VIX was more or less opposite the market itself. Now if you wanted to do a credit spread on the VIX, if you could get a decent price for something at 12 or lower, that's probably about as low as you could go, because it's probably not going to go below 12. I say probably. You never know. Let's take a peek though, see if there's any money out there to be had. The VIX volatility is very high. That does not reflect market volatility. Over here, this is like a composite for any given month of IV on the VIX. And the thing about calendars, you usually want to try to have at least the front month and the back month at equal IV. And preferably the back month at a higher IV, because that's the one that is the long option that you're buying, and you want that one to stay up there. If IV is high, it's not going to lose much time value as your calendar ages as quickly as something with a lower volatility would. So if we take a look here, if we wanted to do, say, an April credit spread, I don't understand why I don't have data here. Let's look at March. Why don't I have data on this? This is weird. It might be just during the day that you get some decent data here. But if you were to do, say, bull put at, what do we say, 12? There's no money in it. So let's go back here and take a look. We said 12. And right now, there just is no money in it, even if you go out to April. If you're talking a nickel versus a nickel. So this is the way that you would be buying and selling. You'd be selling for a nickel and buying for a nickel, and you wouldn't be making any money on it. It would be a totally worthless trade. But open interest is pretty high on the VIX. You might be able to, you could do a calendar or something like that, but I usually, generally as a rule, don't trade any options on the VIX. But I will show you a fun one that could happen here. Let's take a look at our current holdings. This Amazon trade, if we remember right, is a 1-to-1 risk-reward ratio trade, one that I'm just going to let ride. We could take a peek at the chart, but this is telling us that our short strike is in the money right now, or at least one of the strikes is in the money. And it might be that both of them are in the money at this time. We can take a look at a chart right quick. We want this arrow says that we want it below this line, and it's not cooperating at the moment. But we still have another week and a half or a bit more on this particular trade. So we're just going to let that one move along. Chipotle, let's go to the Analyze tab. Click on this, go to the Analyze tab, do a risk profile, and it seems to be cooperating. We're looking for it to continue moving up, and it's doing that, so I think we're going to be okay there. MasterCard, this is our double calendar. There was must have been some sort of increase in volatility, plus the price moved up a little bit here too. So looking at a chart, if it continues to move up, our ideal point is going to be at 535, which is where our strikes are for the call side at 535. So that's maximum profit there. So we'll see how this moves and how the market moves. Just keeping an eye on it, that's all we're doing. Panera, I didn't close this one out like I suggested I might. I'm just going to let this one sort of ride, I guess you might say. And we'll see how things turn out there. It's got to stay below this line here, and that's all we need to worry about to break even. So I'm not going to get real excited about that. We were going to do an iron condor on this, and the put side that wasn't given enough premium, and then order never executed, so I just let the call side on. And then last but not least is our SPY or Spiders double calendar, or our insurance policy, I should say. Take a look at that. This is our insurance policy in case the market takes a big dip. Still hanging in there okay. And we're only down $69 on that. Not worried about it. we have until April. So not worried about that one. But we're still seeing this definite point of resistance up here. So we'll see if it can break through that and continue up or not. Either way, our policy is going to cost us $390, or we'll make something somewhere between minus $390 and plus $2,500 here. So that's what we're looking for on that particular one. All right, let's run through the A+ list. Amazon, Apple. Let's take a look at Apple. Apple is a little bit of surprise. I believe it had an up day yesterday, in a way. Maybe it didn't. What chart was I looking at? Anyway, the day opened down and just continued down. At that little midday time when most of the market was going down, we had a little up candle, a little green candle here. That's curious, but it still continued down. It's down to $419, which is pretty shocking for Apple. Still not giving us an entry point. Amazon we're in. BIDU, I believe that we have a possible entry here on BIDU. So what I'm going to do, because I'm so sure that it's not going to do anything good here, what are we looking at for BIDU right now? 90.26. There's no early. Sometimes you can look at this number here to see if there's any pre-market stuff going on with it versus what it closed at yesterday. They're both the same, so there's no pre-market stuff going on with this at all. But this is the trade that I was looking at doing. It's not a 50-50 or a 1-to-1 risk-reward ratio. It's not giving me really good. Even if I went deeper in the money on this, it doesn't give me any good risk-reward, or at least not a 1-to-1. But I'll take this dollar one here, and maybe I'll do 3 or 4 of them. And take my chances on it, I guess you might say. But I'm thinking here that we are going to put an alert right at this low from yesterday. So let's put one in, and we want at or below. We'll create that. So now we have an alert that's going to let us know this isn't the low, this is the low of, the close of these candles, or at least the close of this candle. So that's just an arbitrary point. I didn't want to go too low here. I'm pretty confident that BIDU is headed down, I guess you might say. All right, CF. Let's go back to the monitor here. CF, we also have an entry here. Got a hook down here. We have downtrend, down. We're not getting a very good confirmation here, but what is interesting over here long term for the MACD, for the moving average part of the MACD, it is in a downtrend. So we're looking for something there also below this low from yesterday. So we'll put an alert in here as well, and that's going to be at or below, and we'll create one there. So now we have 2 alerts for today. Chipotle, we are in. Salesforce, they had the incredible earnings, so we're waiting for that one to figure out what it's going to do. Remember, we were waiting for BIDU to figure out what it was going to do, so it has now, and it's established a short-term pattern, so now we're ready to get in. Google, Google just keeps on ripping. We're waiting for another pullback here, another cycle in the stochastic for it to come down here, either below this 50 or below the 20, and then give us a hook back up again, and that's when we'll get in. MasterCard, I'm going to cover IWM last, so I have a note here, I shouldn't forget about it. MasterCard, we're in. Netflix, anything there? Anything on Netflix? We might have the start of a new cycle here. Looking for it for Netflix because it's pretty strong right now. To come down around this 40 mark, 45 mark, or down to the 20. We have good positive momentum going on over here long term. Price line. There's nothing here. We're in an uptrend. Stochastic is in an up part of its cycle, so we're waiting for it to pull back down. So no entries there. Panera, we're in. Let's go back and take a look at IWM on the chart. And here's what I'm seeing on IWM. I am seeing maybe something that's going to tell me how the market is going to move, because IWM being small caps usually lead the market. Smaller companies get hurt first before larger companies, so I am thinking, looking at this chart, I'm seeing a certain amount of weakness here. So on the stochastic, on the long term, it's in a downtrend, and the MACD moving average just turned down here with this magenta dot, and we just went negative. Just looking for things to reinforce what I'm thinking here. We just went negative on the MACD on the daily calculation. So this is looking good for what kind of play? Well, the one that I was thinking of here is a double calendar again. And this double calendar has strikes at 87 and 91, which are these two peaks right here. And they're both put calendars, because if it's going to move down, the puts, when IV increases, the puts are going to react much more strongly to it than the calls would. So I made them both puts. And I am darn sure that this is what I'm going to enter today. And this is going to go into my Profit Tent portfolio account. I'm going to do 2 of them. Now, this is a total of 2, 4, 6, 8 options that I'm going to trade, and at $1.25 each. That's a $10 commission cost. So if I go up here and click include commissions, and this is the total cost of my trade here, it's looking pretty good. And what I did last night when I was looking at this on the chart, I went over here and I put my break-evens in on the chart. These are the break-evens of the calendar as it is today. Now when IV increases, these break-evens are going to spread a little bit further apart, but the juicy part of it in the middle here is where the money is to be made. So even if it doesn't get any higher than it is today, or maybe creeps up a little bit, that's okay, because this is going to be a nice trade. It's $10 in commissions, which is 5% roughly of the total potential profit on this trade. That's okay. It's going to cost $776, and that's okay, with the possibility of making $200. So that's risk 776 to make 200. That's not too bad. I'm okay with that, because I think that there's a good probability that that's going to happen. And speaking of probability, these are the months that I picked. This is March 5. This is the last expiration, weekly expiration in March. So that's why I'm looking for this price of IWM to be within this range the last week in March. And I think that there's a good possibility that it might do that. and the other one is a June 4 expiration, which is the Thursday after the normal June expiration for the long strikes on the calendar. So that's what I'm looking at for IWM, and I'm quite sure that I'm going to get in on this trade today. Okay, so ladies and gentlemen, that's it for today. I've covered everything on my notes. Another 20-minute, man, they're just getting longer and longer. I have to try to compact these a little bit. There wasn't too much chit-chat today either, so it was mostly good stuff, I hope. I hope you enjoyed it. Thanks for watching. Have a great day, and happy trading.